What's up, everyone? My name is Vishal Teckchandani. I'm a senior content editor here at Livewire Markets, and in this episode, I'm going to reveal the 10 ETFs that our audience believe could absolutely crush it in 2025. Now, here's how it works. We asked nearly 5,000 respondents as part of our annual Outlook series survey for their thoughts on markets for the year ahead. We also asked them to nominate their top growth stocks, income stocks, as well as ETFs. So think of it like this hive mind coming together to give you their best ideas. And this hive mind comprises very experienced retail investors who've been in markets for a long time, SMSF trustees, professional asset allocators, as well as financial advisors. Now, if you look at the performance of the 10 most tipped ETFs in 2024, they on average returned 25%. Compare that to the Australian market, which only did 11%. So some serious outperformance from the ETFs that our audience selected. So I'm really excited to reveal this year's list to you. So let's get straight into it. I'm going to reveal these top 10 ETFs, and after that, I'm going to give you my 2 cents on why our audience perhaps picked some of these names. Coming in at number 10 is the iShares Global 100 ETF, or IOO. Now, what this ETF does is track the performance of the 100 largest multinational companies around the world. So companies like Alphabet and Johnson & Johnson, but also companies like Nestle in Europe, which is, of course, one of the world's biggest food makers. Number 9 is the VanEck Morningstar Wide Moat ETF, or MOAT. Now, this ETF invests in 40 US companies, which Morningstar believes has sustainable competitive advantages. Now, we all know how much Warren Buffett is a fan of companies with wide moats. He loves companies that have major advantages. So this ETF is basically a play on that. And what's interesting about it is a relatively high exposure it has to industrials and healthcare stocks. So a potential diversifier, perhaps if your portfolio has too much concentration in specific parts of the market, like banks or technology. Really interesting fund. Number 8 is the Vanguard Australian Shares High Yield ETF. Now, what this ETF does, it screens the Australian share market for companies that are paying higher than average dividend yields. So for income investors, could be a really useful tool to generate above market dividend yields. Number 7 is the Vanguard MSCI Index International Shares ETF. So this gives you broad exposure to global equities, excluding Australia. It contains 1,500 companies from around the world, and it's a real one-click diversifying option. If you just want instant exposure to the global economy, you want Europe, you want the US, kind of just all in the one fund. Number 6 is the thematic one. It is the Betashares Global Cybersecurity ETF. We know how much cybersecurity is becoming a problem, and this ETF with the ticker code HACK is a play on the companies dealing with that structural issue of cybercrime. So it's got exposure to stocks like Palo Alto Networks in the US. Number 5 is for perhaps hardcore technology players who want some serious concentrated exposure. It is the Global X FANG Plus ETF, or FANG. Now, this ETF is basically the Magnificent 7 stocks plus Broadcom, CrowdStrike, and ServiceNow. So again, it's really designed for investors who want that concentrated, high risk, high reward technology exposure. So just be mindful of the concentration risk if you're looking at that fund. Number 4 is the VanEck MSCI International Quality ETF, or QUAL. So what this ETF does, it screens developed markets for companies which meet certain what they call quality criteria. This includes high return on equity, earnings stability, and low financial leverage. Okay, so as a result, you get exposure to the big tech brands, but also major non-US companies like AstraZeneca, L'Oreal, and Canadian National Railway, which fit that quality bill that the ETF has built inside it. Number 3 is the Vanguard Australian Shares Index ETF, or BAS. This is one of the most popular funds in Australia, and it provides instant exposure to the 300 largest companies on the Aussie share market. So you get your major banks, your Telstras of the world, Wesfarmers, and Woolies, all in that one trade. Coming in at number 2 is the Betashares NASDAQ 100 ETF, or NBQ. Many of us have heard of the NASDAQ. It's basically technology exposure, and this ETF gives you that diversified exposure to the US technology sector, to the NASDAQ, so you get your Magnificent 7 and many of the companies beyond that. And coming in at number 1 is the iShares S&P 500 ETF, or IVB. This is the ETF that the audience who participated in our annual Outlook series survey believe is the one that's going to be the best performer in 2025. It's a really simple play on the US stock market. You get exposure to the 500 biggest companies in the US by virtue of investing in the S&P 500. And what this basically does is it gives you that diversified exposure. You've got your significant technology allocation within the fund, but you also have things like industrials and healthcare and telecoms and consumer retail stocks. So one trade, instant exposure to the 500 biggest US companies. That's the key play that our audience believe will outperform in the year ahead. So those are the 10 most tipped ETFs for 2025. Now let's explore this a bit further. Why did our audience pick the ETFs that they did? I assure you, the hive mind doesn't simply just throw darts at the board. There has been some strategic thinking that's gone on behind the scenes. And in order to explain that, it's useful to compare this year's list to last year. Last year was the NDQ ETF, the NASDAQ exposure, which was the most popular. This year, there's been that subtle shift. It's the S&P 500 ETF that's the most popular choice. Now, why is that? I think it's because investors believe that technology has run up so hard, and while they think that ongoing technology exposure is really important, they want diversification into other things. So the S&P 500, when you invest in it, you get exposure to industrials, healthcare, utilities, banks, etc. These stocks just haven't run as hard as tech companies. So again, tech is important, but if there's what's called a value rotation where these other sectors start outperforming, tech could underperform. And so investors are positioning themselves for that catch-up performance in the other sectors. And if you think about the outlook for next year, rate cuts, perhaps all these growth measures that Donald Trump's going to implement, there could be a potential catch-up play in the other sectors, and hence the audience thinks the S&P 500 is the way to go. That's number one. Number two, commodities are taking a back seat, and so is Europe and emerging markets. You don't see any of these names in the top 10. Now, our audience, of course, did vote for some of these exposures, like gold and uranium. They just didn't make the top 10. And what that tells me is something really simple. There are better opportunities elsewhere. And so this year's list really is very equity focused. There aren't any commodities. There aren't any emerging markets. Number three is that quality still matters. Okay? Global markets have run really, really hard. The tech sector especially has run really hard. And so those two ETFs, MOAT and QUAL, okay, they screen companies for sustainable competitive advantages and those quality criteria that I mentioned in the case of QUAL, high return on equity, low leverage, etc. Okay, so what that tells me is valuations perhaps have gone a bit crazy. And so having these ETFs, which take a more common sense approach to investing in companies with strong fundamentals, are really important within the context of having a diversified portfolio that focuses on fundamentals. And last but not least, Australian exposure and dividends continue to be really important. VHY and VAS feature on our list regularly, and this year is no different. So having exposure to the Australian share market, having exposure to Australian dividends with all the benefits of franking credits continues to be really important. So that's my 2 cents on why our audience perhaps picked the ETFs that they did. That's it from me for today. I really hope you enjoyed this episode. Please drop a comment below. I'd really appreciate it. Let me know what you think of the top 10 ETFs for 2025. And if you enjoyed this video, please hit the like button, hit that notification bell, and subscribe to our channel for more content like this in future. Have a great day.